Hola mi gente. So is it time for the stock market to crash? Or are we due for a correction that is going to be greater than 5%? Those are the things that are being discussed on mainstream media right now. And if you were to listen to mainstream media or to some other people, it would be time to put on your bear suit and give the stock market a nice big old bear hug.
Thank you, Shaq.
But I personally do not think that is the case. Now, since the beginning of September, my birth month, everybody has been crying about the stock market, saying that September is typically a horrible time to be invested in the stock market. And right now, the Buffett indicator is saying that the market is extremely overvalued. Now, it's been saying this for quite some time, for actually a very long time, and the stock market just continues to go up and to the right. We also have YouTube videos saying that Michael Burry is saying that the market is going to crash tremendously. Now, I don't know what's actually going to happen, but I can say right now, things actually look pretty good for the stock market. And right now might actually be a buying opportunity if trend remains our friend, which I have no reason to doubt it will continue to be friendly for the next couple of months until some things drastically change. And right now, I don't see that change happening. But I will say there is a risk in the overall market. I'm going to dive into that in this video. There are some things happening that I wish didn't happen this way. And because they happened this way, we could see a drop. Let me explain more in this video. Now, if you're new to this channel, my name is Sean. I am the founder of We Are Investing. If you like investing content, then please consider hitting that subscribe button, ringing that bell, and smashing that like button to help with the YouTube algorithm. I really do appreciate it. And if you want to join the community, this channel does have a Patreon that gives you access to a Discord server of over 500 investors and also gives you access to content. I post reports on stock plays and I do some due diligence. I post it all in a report and I post on the Patreon. So what we're going to do here is I am going to show you guys some ETFs. An ETF is a basket of stocks. It's going to show you how strong sectors have been, how weak sectors have been, and then we can kind of get an understanding of what's actually happening with the market overall. Because just saying that the overall market and the major indices are going up, that does not provide enough detail. That doesn't give you the full story of what's actually in the market. And if you're not invested in index funds, then your portfolio might be behaving a different way than the S&P 500, the NASDAQ, or the Dow Jones Industrial Average. So even though the market has been moving up generally, the major indices have been moving up, the overall market is rotating, and it has been rotating for some time now. And in these rotations, you will find strength and weaknesses. And you can buy the weakness if you are bullish on a rebound in that sector, which is the strategy that I've been implementing. And some of my stocks have been dropping because I've been buying into the weakness and I'm patiently waiting for the rebound. Because the overall thesis of the way I'm investing in some of these sectors should play out. They might not, and I could be wrong, but I rather buy low and sell high than buy high and sell low, because there is going to be rotations in and out of sectors in my personal opinion. Now, if we take a look at some sectors, if we take a look at the financial sector and we take a look at the XLF, you can see that over the last 3 months, it is flat. It is down 0.16%. If we take a look at the XLE, this has been the worst performing sector. And it could potentially be the best performing sector in the upcoming months if this rebounds, because there's room for growth. Over the last 3 months, this sector is down 12.5%. If we take a look at the industrial sector, the ETF is XLI. That is down 2.42%. So I just showed you 3 sectors that are down, but the overall market is up. If we take a look at probably the strongest sector, and that is technology, and we can see this by the Qs, the QQQ, which is invested heavily in mega cap tech like Apple, Facebook, Google, Microsoft, all those types of companies. We can see that the Qs are up close to 10% in the last 3 months. So what's the takeaway from all this information? Well, basically, the bottom line is that the major indices are heavily weighted in tech. And because tech has been moving higher, so has the S&P 500 and the Nasdaq and the Dow Jones Industrial Average. While under the surface, a lot of other sectors have been dropping. So what could happen? What is the risk that I see mostly in the stock market? Well, I believe that mega cap tech is going to have to correct itself. And that is going to put strain on the S&P 500 and the Nasdaq especially. But the other sectors should rebound. However, if we see a market that moves with the major indices, and just because the S&P 500 and the Nasdaq drop because tech is dropping and people start selling out of other stocks as well, then that's going to be really bad. Because on a valuation basis, some of the sectors that have been dropping should rebound. But if they don't rebound, why tech rebounds, and we don't see that kind of rotation like we did before. Now, in the prior rotation, we saw money being pulled out of tech and in the reopening trade, in cyclical trades, in the value trade. If we see money being pulled out of tech again, which I think is very likely, we need to see it rotate into other sectors, which I'm hopeful for. But usually when the major indices fall, there's panic in the market and people start selling everywhere. And that cannot happen. If that does happen, some of these sectors that have dropped are going to drop even more. And there's going to be a lot of pain there, which I don't want to happen. I don't think it's going to happen, but that's definitely a risk in my personal opinion. Now, moving back on to the S&P 500 and why there is hope that over the last 7 days, the last 7 days have been consecutive days where they've been red. There is hope. There are reasons to believe that we are about to rebound. And that is because there is a very strong technical reason that the S&P 500, the Nasdaq, and the Dow Jones should start to rebound. This is a very strong 50-day moving average. And if you take a look at this chart, you can see that there have been plenty of times over the last year where we've had little dips to the 50-day moving average, and then we rebounded very fast. Meaning that the 50-day moving average has been very strong. It's been a very strong support for the overall market. And if trend remains our friend and this pattern continues, we will see the S&P 500 rebound and move to higher highs. Now, there are reasons to believe that this market is going to stay strong because it is very hard to fight the Federal Reserve. Don't fight the Fed. The Fed right now is still supporting this stock market and the economy. And based off of the latest CPI numbers, the Fed is going to continue to do what they do. This just goes to their argument. Whether their argument is right or wrong, for the time being, we are not going to see tapers. And even when we do, they are going to be so small that they shouldn't impact the market except for the initial reaction to a taper, which we will call a taper tantrum. But needless to say, what I think is going to happen based off of the past is we are going to rebound and move to higher highs. Now, at some point, this is all going to change. And maybe that 50-day moving average does not hold. If the 50-day moving average does not hold, then the conversation will be very different. But as we approach that line, look for a bounce back. If there is no bounce back, then maybe it's time to start panicking. But I don't think that's going to be the case. And needless to say, when you're invested in the stock market, you should be invested in the long term. So what happens over the next 3 to 6 months, you should be aware of the possible situation that could occur, and you should plan wisely to capitalize on a dip. But you shouldn't just liquidate all your stocks, pay taxes on it, and try to time the market that kind of way, because usually you're going to be wrong. But for now, for the time being, we can put this bear in retirement, even though this is a pretty sweet costume, and I do like making money off of puts, and I'll short a stock here or there. But for now, Barry the Bear can go sit down. He's still retired, And I'll catch you guys on the next video. It's been real. It's been fun. It's been real fun. And this is We Are Investing. And together we are invincible. See ya.